Welcome, everybody, to the Investing or Gambling Podcast. I am your host, Ileana Mike, and I'm back today with one of my greatest co-hosts of all, aka Dow30k, Mr. Colin.
What's
My
cooking?
God, Colin Montana is with us today, and he's going to be talking a lot about what's going on in the market. Let's get right to the indices. The Dow 30 is sitting at 34,499. The S&P 500 is 4,418. And the NASDAQ is sitting at 15,299 and the Russell 2000, 2231. What was an interesting week in the market this week? We've had some declines, folks, not just seasonality, in my opinion. We've got commodities that are absolutely going crazy. We've got cryptocurrency. We've got the bond market starting to inflate. We've had gold take a complete downturn this week. It was almost down 2% to 1,753, and silver sitting at 2238. The 10-year bond is now sitting at 136. Colin, let's get right to the show. Let's start talking about some things that I have not noticed, but you have. You're in a supply chain business here. What Colin does is he sells a lot of commodities to different parts of the world. Colin, let's get right to it. Talk about what you're seeing in your business and talk about what we talked about earlier and before the show. And let's get right to it. Colin.
Sure. So, I can't talk too much about specific work stuff just because some of it's confidential.
Okay.
Well,
tell us what you can tell.
But usually we can see supply chain issues today that will affect us for the future. Okay. So a lot of people aren't in this supply chain industry, but they act like they know what they're talking about, but they don't. They don't on Twitter or whatever it is, or on TV. So if you think that we're climbing out of this supply inflationary period, you're wrong. You're going to see maybe a third wave here, if you consider the first wave, the actual lockdown from early 2020 during the initial lockdown. So, we saw a lot of pent-up demand, inflation pressure, but you have to remember that none of this has gotten better. If anything, things have gotten worse with us importing from countries like Vietnam, and you hear that type of stuff in the news. But I don't know if people, other than looking at their gas bill when they pump up their cars, are actually seeing the amount of freight increases that we're experiencing. For example, if you're ordering product on pallets from, if you're ordering a truckload or a container of something from West Coast to East Coast, you're paying now double the freight that you may have been paying, this time last year. So these type of little things are really going to add up. So you're going to see inflation continue in the future. It doesn't go away. Okay.
So it's not transitory. It's not transitory in your opinion.
Well, I don't know how you go backwards, to be honest with you.
In other words, freight ain't coming down.
Well, even if it does, it's going to take so long to unravel these margins that these grocery store chains are making, for example, or, whatever you're buying, these are going to be set for a long period of time, these price increases. So not only do you see price increases in your groceries, but you're going to see, shortages everywhere. And I think people know that now.
Right.
People are following what's going on with Nike in Vietnam or China, or they're following their furniture that can't get here for 6 months. I think they grasp that concept, but I don't think they grasp the concept that inflation is actually here to stay for foreseeable future. I don't know if people have grasped that concept yet.
I don't think they have either.
Yeah, at a time, we were all waiting for FedPal to say what transitory really meant. and all that. So we don't have to go backwards. We don't have to talk about Powell right now in his transitory talk, because really that story has been thrown out of the window. Because
Yeah.
yeah, I
I
mean, we're
tried to
just,
argue that before. And
yeah, you have, and so is Golf Winch on this
yeah.
show.
Well,
Yeah.
Marco, I know you're going to be listening to the show here, and I know we've argued that before, and I hope you want to come back on again. And I know it's probably a debate you don't want to have, but he argued that it was transitory. And when he said transitory, I think he was talking about used cars and semiconductors and all that stuff too, that
Sure.
would be transitory. Well, I'm not even seeing that being transitory right now.
No, it's not.
That's what I
Obviously.
think so too.
Right. Just the fact that you got to get this stuff here to the country. So
Right.
for the fact that their ports are either closed or having disruptions because of COVID or whatever it may be,
Whatever
know,
their excuse is, as far as I'm concerned.
well,
Right.
just double the amount of freight it's going to take to get here.
Wow.
You know what I mean?
Yeah.
So, now I can import something from Turkey today at a reasonable, at a little bit of a higher cost, and it can get here in 60 days. So it's very specific per region, per area. So it really, everything depends, you know what I
Right.
mean?
Right.
So, but what I wanted to mention is, panic. I'm seeing it in my industry.
Really.
Because of longer lead times, I'm seeing inflation increase, meaning that people are all putting their orders in at once, and that's causing panic and slowdown. And that's going to cause even more shortages and more price increasing.
Sure.
So, because everything's demand supply. So, definitely it's going to be a really busy fall, winter in terms of trying to keep everybody in stock. You're going to see a lot of out of stocks. We know that because we hear Nike's earnings calls, and we know what's going on with possibly, you might even see Apple shortages as well, so with their their new iWatch that they're coming out with. So you don't know where you're going to see it, but you will see it, just like you did last year. But I think it's going to be worse. That's all. So
Where do you think the market's headed?
yeah, so I'm totally bearish.
Oh boy. Woo. Totally
Now
bearish.
this is the first time I've been bearish since we probably knew each other.
Well,
since
yeah.
2000 what, 2016?
Yeah. Well, now when you say bearish,
yeah,
are
I'm
you
bullish
talking
long-term American equities always.
Well,
but go ahead.
So go ahead. When you say bearish, I think what you're trying to say is that you would be bearish in the short term. And what's your horizon for being bearish is what I'm trying to say. We know that long term, the stock market
is probably a good place to generate wealth.
Correct. It's probably
right.
a good place to generate wealth.
Correct.
Now,
yeah, nobody knows thinking, for sure.
Well, of course. However, I believe the easy money's been made.
Mm-hmm.
I think the easy money's been made. You've made, if you bought the S&P exactly about 19 months ago, all right, more than that, about 18 months ago, you're up 109%. That's huge. 109% in 18 months.
The market is literally doubled from the bottom.
Correct.
And I think that March 2020 may have been a generational low, as they would say.
Correct. It's probably,
we don't know. It could be.
No, we know. With the next crisis is around the corner, maybe. We have no idea. That was just a pandemic where they closed the country down, and we're like, what? Are you crazy? No.
Right.
We could be looking at conflicts around the world right now. There is no per se war. Okay.
There is a war.
There's
an economic Cold War with China,
which is probably worse than any kind of military war.
Probably when it comes to your stock market. Sure.
Right. Exactly. So
and your 401k.
Yeah, absolutely. So, maybe they'll start one. Maybe they'll start another war so that they can generate some more. Steel prices have doubled. Let's put it this way. I know exactly what you're talking about.
Jeb Bush in.
I had a job that I bid out I believe it was last April. And I needed a pole to go. I needed a pole for the sign, and I needed some rings. It was only a 6-inch pole by about 10 feet high. And I needed some little rings to go around it. So when it slips down on the pole, it welded up. Okay. Do you know that when I priced that job out a year ago, that steel was $325. When I went to
Yeah.
go pick up that steel this year, it had doubled.
Yeah.
Doubled.
Right.
I had to tell my customer, hey, because you didn't act on it back then, I have to increase my prices. Oh, I understand. No problem. So things have doubled. Steel has doubled. You're right. This inflation is not going away. Absolutely not going away. Now, when I say that the easy money's been made, I do believe the easy money's been made. I think returns on the stock market in the next 3 or 4 years will only generate 3 to 4% on a yearly basis, which isn't bad.
Yeah.
Okay. Which still isn't bad. It's better than put your money in it. But
Does that
you're
include
gonna have ups and
dividends?
downs. You're gonna really have to watch it. I don't think you're gonna see 10% every year. If you did, it'd be too easy. I don't think that's gonna happen for the next
Does your
3 or
3
4
to
years.
4%
Still good.
gold, does that include dividends?
No, that would not.
Okay, so it's more like 6% if you're in
Yeah,
the
let's call it
S&P
5 or
500.
6%, which is not
Okay.
bad.
No, not at all.
Not
That's
at
really
all.
good.
Yeah, right. But I do believe that you're going to see considering. But you
Right.
see, that's the thing.
It's
People that have
Tina. Where
gotten
else are you going to put your money?
right. But the people that have gotten in the market and these young kids that have been gambling in the market, and they've been gambling in the market, there's no doubt about it. The AMCs of the world, the GameStops of the world, I guess Tesla's, the meme stocks, all these things. This is gambling. Robinhood has created, I don't care what they say, Robinhood has created this. Okay. Now, Robinhood did a good thing. The only good thing about Robinhood was they did make everybody else go to commission-free trades.
Yeah.
And whenever you get anything for free, there's always a price to pay. Okay. Whether it's execution or whether it's just, momentum and people getting in things, people sitting at home, day trading. I mean, it's getting ridiculous. It really, truly is. And now we've got the Fed being exposed for trading stocks.
Well, yeah, they own. I didn't know they were trading.
Yes,
But
they were trading especially back in March of last year.
I thought they owned equities and they were told to unload once this came to fruition about 2 days ago.
Oh yeah, they're right now. They got, in other words, they got caught.
Doesn't that sound like a market top to you?
Oh, that sounds like a market. What that sounds to me is what that sounds to me is that this thing is completely rigged. Now, I mean, you can say the market is rigged. It is rigged. There's no doubt about it. However, there are companies out there. You can have a portfolio of about 5 or 6 stocks and still make 5 or 6%. I always said, buy things that humans need. And right now there is certain technology that humans have to have. All right. I've got one right here in my hand. It's called an iPhone. Okay. It's called a smartphone. It's called a computer. Let's call it what it is. That phone that we're talking on right now, basically, yes, can't live without it. And the technology that comes with it has to be sustained. So those are the companies that you buy, to my opinion. Apple comes down a little bit, you buy it. I'm not saying you buy it here. I wouldn't buy it here. I think you can buy Apple another 10% down from here, at least. Okay. I like some of your other picks. I'm not really high flying on all the DraftKings of the world for some, because now that I see you got the draft. He's got a DraftKings t-shirt on here. He loves DraftKings. He loves DraftKings for 2 reasons, because he likes the platform that it's on. All right. And he likes it as far as a gambling place. But as far as the stock itself, to me, I'd be trimming my DraftKings for one reason. I'll tell you why I'm going to tell you. Because there's a lot of competition coming in. And that competition, just like Tesla's, just like the EV, EVs went crazy. Now they're going even crazier. Same thing with
Mm.
online betting. Online betting, they say it's going to be $10 billion a year, something like $6 billion a year
In revenue.
in revenue. I know. Well, everybody's going to want a piece of that. Now,
Sure.
DraftKings, who's the big dog? I don't know who the big dog is. Who's
Probably
the one?
DraftKings and
Okay,
FanDuel.
so if DraftKings is like the Tesla, we'll call it,
Mm.
and which Tesla's starting to lose its limelight as far as EVs are concerned, because everybody's getting into it.
Right.
So it's not going to be the only choice.
Mm-hmm.
But I agree. Now, but the Apples of the world, I think that there's some technology or some defense names that out there that are going to look good. I want you to talk about this Evergrande.
Yeah.
Why don't you talk to me a little bit about what's going on there?
Well, I mean, it's hard for me to explain it because a lot of this is like subprime stuff on steroids from the from the '08 crash. So it's really about credit defaults and them being, am I frozen? Oh, good.
No, go ahead.
A lot of them being heavy in debt. So a lot of this, I'm not a CFA, I'm not a financial guy. This isn't my background. I just enjoy this stuff.
Right.
But think about it. They were China's second largest property developer in sales. You can look up their stock. You can look at their chart if you want.
Yeah, I see it's
So a
dive.
lot of what they were doing was they were selling to the middle and upper class these new apartments, and you can YouTube Go Cities from 60 Minutes from a few years ago, and you can look at what the Chinese government was hoping to accomplish by having rural China citizens move to the cities, and how quickly they put up these apartment buildings and defaulting on their loans. Eventually now we see that what's going to happen. So here in America, if one of our largest Fortune 500 companies or one of our largest companies like started to default on their loans and run out of money and have to put a halt at infrastructure, you would expect the government here to bail them out. What we're understanding now, it looks like China is not going to bail them out. And you would think that in a communist socialist country, that's what they would be doing, right? They would be bailing out a large dependable, or they're very dependent on this company in terms of real estate for the future of China.
Right.
And they're not bailing them out. You could probably assume they're not going to bail them out at this point.
But so would they be trying to take them over then at a very cheap price?
Possibly, but the problem is that China's trying to probably de-lever. So that is President Xi is going to be inaugurated for the following lifetime. I think his next inauguration comes up in the near future here. And that's where you see this theme of him trying to lift the lower class into the middle class and lift the middle class up. And, it's funny because it's like a super nationalist kind of policies where he's going after, he's going after big tech. He's making them pay everybody a redistribution fund.
Yeah.
And then you have
kind of sounds like here.
Yeah, well, you have him going
a little bit of the rhetoric that we hear all the time from some of the Democrats around here that talk about taxing the rich. Kind of sounds a little bit like that.
But to be honest with you, the thought of him going after their Hollywood actors and actresses and going after high-end jewelry and going after the elitists and punishing them, we saw Jack Ma earlier, but he's literally going after the richest of the rich and the celebrities over there. Right. So that's kind of a Trump thing, to be honest with you. So I'm just saying you got to pay attention to what's going on over there. If they are trying to reset, de-lever, the banks are very levered over there. Yeah. So, that is one thing, but, this is super serious. This is super interesting stuff. So if you do have the time, or to our listeners, to look into Evergrande. That's the first thing I would have done when I heard this story. And this story is
Is that
actually
kind of
old.
like, would that be like the Lehman of
Yeah,
the United States?
Michael Batnick said it's the Bear Stearns, and
Oh,
that it's
wow.
just one hedge fund of a larger umbrella of a problem here.
Oh, boy.
Because Bear Stearns was just a hedge fund of Lehman
Right.
Brothers, I think. So, yeah, I mean, definitely, it's bearish to me. It's why I'm bearish right now. It's why I like raw materials and commodities. Now, real quick, when we talk about raw materials,
Okay.
and infrastructure raw materials, a lot of what Graham was purchasing was they're buying raw materials to build infrastructure and real estate. And where did they buy that from? They would buy it from countries like Australia, or they would buy it from other third world countries or whatever. So, that should peel back. This is going to have a ripple effect in terms of just the infrastructure economy throughout the world. That's how big Evergrande was. You know what I mean? So in that reality, supply demand, you may see a pullback in some of these raw materials. However, China's continuing to buy uranium, gold, silver, steel. They're still buying all these raw materials and they're holding. Whereas, you definitely have to look at, what I'm trying to say is, you might want to look when there is a pullback in some of these raw materials to also own them. Because you know what I mean? I mean, I would.
Well, I have a lot of silver.
Gold and silver. Oh, okay.
And a little bit of gold, nothing serious.
Yeah.
But mostly silver. And it's socked away. It's in bars, it's in coins, it's all pure silver. And doesn't cost me a thing to store it because it's right here in my home being protected. So I have a lot of that. So I don't care. You're probably right. I probably should go out and buy a little more. But if the price got down to a little bit, I'm still way up in it because I bought it like 5-6 years ago. So almost doubled it already. I've already doubled my money in it, but I might buy more.
It's still a good store of value. I mean, the chart doesn't look good, and junior miners probably doesn't look good.
No.
But, I definitely think Bitcoin's a great alternative because, for one, China is trying to make sure that it's not possible to store your value in Bitcoin and crypto. So to me, that's bullish. The fact that China is trying to punish and regulate the crap out of Bitcoin.
Right.
So to me, I'm very bullish Bitcoin just because, not for the transactional purposes. I remember, someone, or we had Marco on, and he's like, I can't use that in my grocery store. So to me, there's no value there. Well, it's more of a store of value, in my opinion. I don't care about its transactional features. I like the fact that it's a backdoor from central banks and US dollar, you know what I mean? That is plummeting. So, or the US dollar devaluing, as David would say. So why would you not want to own something that has an actual cap to it, and that has some features to it, and that can't be hacked, because blockchain really can't be hacked. So it has all these features that make it valuable, and it's got a cap to it. There's only 21 million Bitcoins or 19 million Bitcoins?
21 million. There's still being a few more million being mined, but at 21 million, that's it. And to me, I like that Ethereum. I hear.
To me, I'd rather store my money in Bitcoin
the next 10 years
if I can. Yeah, exactly. So,
well, the problem with Bitcoin is the United States is the problem. The government of the United States is the problem, because whenever they get a hold of anything and start regulating it, they want to try to kill it. Anything that the government fears that will affect the dollar. Remember, the dollar is only protected for one reason. There's only one reason why the government, the dollar, is the world's reserve currency. One reason: our military. And that is starting to wane. couple of years from
Mhm.
now, if we don't change our ways with this administration, if this doesn't stop and we continue to lose our rights, the right to talk, the right to question. Okay. You notice we never said anything today on the podcast about one particular subject. What did we not talk about?
Mm.
COVID.
Yep.
We didn't talk about it. Why? Because it's basically going away. It's basically becoming something that, you know what?
We're learning to live with, right?
Correct. It's now the flu or the cold that you get, whatever. Okay, well, I'm vaccinated. I'm not fixed. I got immunity, whatever. Okay.
Right.
Boom. Move on, folks. Well,
Mhm.
in other words, what they were saying to us a year or so ago, when I was calling it the cold and the flu, now they're calling it. So my conspiracy theory came true. In other words, folks, we're going to live with this. It is a virus that's been around forever. Yes, it can kill you if you are, 85 years old and have, problems with your immune system, like anything else. So, but what you talked about today was even scarier, because now we've got China, we've got supply chain issues, we've got
If you have a credit stress popping its head in China, you can expect a pullback here. You really can,
Yeah.
because this is just the beginning. And we always talk about this ETF that I bring up every time I'm on the show, and it's called Freedom. The ticker is FRDM, and
FRDM.
it's a way to invest in emerging markets or international stocks without owning China, Iran, Russia, Venezuela. So you're owning a pot of stocks that are from very democratic weighed countries. Yeah, like, and it's on a scale that somebody's weighing these on. Oh, this is a very democratic country because of this, that, and this.
Right.
And just happens that Poland is really high on that list. Okay. Yes. And you're going to be owning like one of their largest grocery store chains in this ETF. You got to look at what you own.
You're right.
So I'm just saying that it's funny because who still owns Chinese stocks? That's my question. So
a lot of people do.
Americans do.
Oh, big time.
But venture capitalists in China don't own Chinese stocks anymore at this point. The only people that own Chinese stocks, in my opinion, are American boomers and other people that just have it in their 401k and and BlackRock, and Vanguard. You really shouldn't own Chinese stocks.
Correct.
The point of you owning a stock in a communist country is mute. It kind of takes away the whole idea of being a shareholder. Okay, because it's definitely not. It's the opposite of a free market. So we're going to look back at this time in a few years from now and say, oh my God, I wish I would have made sure that I had no exposure to Chinese stocks. Right. You know what I mean?
Right.
We really are. And there are no bailouts over there. And, we obviously see what's going on with their educational stocks and their tech stocks. President Xi doesn't need cash flow going into those companies anymore. They've made that decision. They've already pivoted away from the actual idea of a stock market like we have here. Mm-hmm. So people have no idea what's about to come. I still, I'm on Twitter all the time, sadly. And I see these people still looking at as if there's value. Oh my God, Alibaba's down 20%.
I know. I've heard a few people
this is
say,
the bottom.
Well, you got to buy it because they're so low. Well, there's a reason why they're low. Yeah. When a stock falls off 25, 30% from its high, there's a reason. It's not just because people are trimming it. It's because people are dumping it.
Yeah. Yeah.
And who's dumping it? It's obviously the Chinese that are dumping their stock.
Yeah. What did you think about George Soros and his letter to whoever it was?
I don't want to talk about George Soros on this show. His name is stricken from the record.
Okay.
It's a communist pig.
Okay. Well, he doesn't, well, his letter actually was very Yeah, sadly. Now we can disagree with him all we want, but we have to agree with his what he wrote.
I don't
You
want
know?
anything for him. He's
Yeah.
got no he does no interest in my country whatsoever. I don't care what he talks about. There's a lot of people out there that I have no value for anymore.
Right.
And I don't care who I talk about anymore as far as when it comes to the country. If you know,
Well, briefly, what he was trying to say in the letter is you can hate him all you want. And I agree with you. I don't like the guy either.
yeah,
And I don't agree with his morals, but I can tell you that he's trying to make a point that the policies being made to redistribute
you're
is not
breaking
good
up,
for shareholders.
right?
And that's just like the simple, yeah, that's just like the simple theme that I'm trying to get at.
No,
Is like
no,
once you realize that
yeah,
President Xi doesn't care about the stock price of Alibaba and Tencent, he cares about lifting the middle class and trying to stay in power. It's a
sounds like
it's
the
a different,
opposite of what we're doing here, though.
yeah,
We're,
but
but
exactly.
so
So we're doing the exact. We have created a stock market that is made for people to only save. The only way to put your money to work is in the U.S. stock market.
right,
That's my whole point. Is
right,
that we are doing the complete opposite. If that be good or not, it's the complete opposite of what President Xi is doing.
yeah,
So why do you still have exposure to Chinese stocks? Is my
right. I agree.
question.
I wouldn't own Chinese stocks. I agree 110%.
Like I know people that have Chinese stocks because they have to. It's in their target
Right.
date fund.
It's right. It's in the
So
ETFs down.
yeah, and it's they probably think, oh, whatever, it's only 10% of my or 5% of my holdings. I don't know
Still,
what it is, but
still can
I would.
hurt you.
Seems like nobody really cares.
Right.
I mean, to my knowledge, I don't know of anybody that is actually asking their financial advisor how much exposure I have in my 401k to China.
Right.
I haven't met anybody that's doing that. So
Yeah. That's weird. Well, I
I agree. I
really,
don't like Soros either. He's a
yeah,
bad dude, I'm sure.
yeah,
But he's trying to make a point. How can you invest in China if they don't give a crap about their
right.
stock market?
Exactly. Well, Colin, I want to thank you for coming on the show today. You've been a very, very interesting guest today. And I
Yes.
appreciate all your insight of what goes on in your business and what you think is coming down the line. You obviously see it on your end in your supply chain issues, and you know that it's going to get worse, and you know that inflationary pressures are going to come, and they're going to come pretty hard. Sounds like it. This is the first time I've talked to you since I've known you, as far as being bearish, which doesn't surprise me
Doesn't
at
mean
all, because
doesn't mean I'm selling or trimming
no,
my
it doesn't
stocks. I
mean you're
never
so,
do. I never
no. And
will.
I always
I'm
say
a buy.
time
Go
is
ahead.
right now. You're about ready to move into your home. Congratulations. So now you can worry more about that asset as far as, and that's another thing real quick before we end the show here. I still think that real estate in this country is going to outperform the stock market. You know why? Because there are more people that need homes right now and that are looking for homes, and the demand for that will continue to increase. So we're down like 5 million homes
Yeah.
that we should have already made. So
Yeah.
the pressure to buy real estate right now, I feel that the real estate market is going to be probably one of the hottest markets going
Yeah.
forward,
I
as
mean,
opposed to the stock market. Now there are real estate stocks you can buy. You can buy certain real estate stocks that you can invest in. Maybe some of the home builders and stuff. I do think that interest rates will
correct.
continue. I do. When people say, "Oh, the interest rates are going up," yeah, they're going to go up, okay, but they ain't going
Yeah.
up to where they were.
Yeah. I
That
mean,
ain't
just because,
happening.
yeah, and just because we're bearish doesn't mean, first of all, secular trends like real estate, people fleeing the cities to move to
Oh
buy
yeah,
land,
yeah,
doesn't die in a bear or an economic crash. It usually doesn't matter. I mean, the
right,
market can crash, but secular trends will continue to do
sure,
well. You know what I
exactly,
mean?
right. Well, again, thanks for coming on, Colin. Hope to see you here in a couple of weeks or so after you get settled into your brand new house. Congratulations on making that big move.
I have an advertisement for myself. My Twitter is Dow30k, and my pinned tweet is my entire portfolio. I'm going to start doing that. I'm going to put it up every month
Sounds like a
so you
winner.
can see all the stocks that I own.
Very good. Colin, thanks for coming on the Investing or Gambling podcast, and we'll see you in the beer future. Thanks again for coming on. And
thanks, Coach.
You got it. See you later. Bye.
Bye.